dressed like this. Is the second day of the year of the horse, the new Chinese New Year. I hope everyone who is celebrating comes with a lot of wealth and health. And here we are again with another episode of Bitcoin Treasury Company Report. I'm here with Immortal. How are you doing?
Very good. They say the horse is going to bring fortune, but volatility. That sounds like Bitcoin.
Yes, expect volatility.
Even more than today, than what we already have in the past months. So
yeah. I think so. And I welcome to our friend in Indonesia, our Italian friend, Batistoshi. How are you doing?
Hi, guys. I'm doing great. Unfortunately, I don't have any fancy shirt with dragons and to celebrate the New Year's Eve in China. But yes, excited to be here.
Excellent. So let's go to start with today's topics. I will share the presentation. And the first topic is strategy continues its fiat liquidation. Strategy has acquired 2,486 Bitcoin and an average price of 67,710 per Bitcoin. And as today, they hold 717,131 Bitcoin. So strategy is not getting liquidated. They are buying more.
Yeah, I think they're buying more. This is number 99. So probably next week, they will announce the 100 acquisition for, this DCA that they are actually doing since August of 2020. To be honest, they are not slowing down because I think they already bought more than 50,000 Bitcoin over the start of 2026. The machine seems to be very, very well operated. The ratio and the balance between the balance sheet on the Bitcoin side, the debt and the preferred, it seems still to be very under control. There is a lot of FUD around strategy, as we know. But I think, the strategy is pretty strong and they keep buying as long as they can and every time they raise capital. Fortunately, this time they had a good price of 67,000. So maybe on X, people are not complaining about, Saylor buying every top possible. So I think it's a good news.
Also, while the price is under 100K, the route to the 1 million Bitcoin becomes easier for strategy.
Yeah.
Right. If we would be at 120, 130, as we should, they could be buying half of the Bitcoin that they are buying today with the same amount of fiat. Well, probably the dynamic change because obviously on a bull run, they will capture more fiat. So, but it's somehow a relationship between that, the price and the amount of fiat they can get.
Yeah, probably in a bull run, the preferred stock, the STRC, would attract more and more money and they will be able to buy more Bitcoin. As I always repeat what Andrew Webley said, the best for the Bitcoin treasury companies is Bitcoin going up, but not in a crazy way. Just a linear going up because they are able to capture more capital and buy Bitcoin not at crazy prices.
I have a bad news, Andrew. That's not the description of Bitcoin. There is nothing like going linear here. We're going to go on a crazy roller coaster forever.
Yeah, that's the point. The thing is that he said that was the ideal situation.
It's like a hypothetical case.
But of course, it's not going to happen. But again, I think that with the bull run, the other instruments will trigger and will capture more money. Because remember that in the past, the only way of strategy to get money to buy Bitcoin was via ATM. There were not the other instruments so mainstream. And now probably a bull run will bring more people to stretch. That, by the way, last week hit 100 per first time, I think, and traded over 100 US dollars. And the trading volume, I think, that hit a new record.
it traded at 100 for a couple of days only, and that was enough to acquire at least 1,000 Bitcoin. I think from this 2,000 something, 1,000 should have come from Stretch. I don't know if Marco, if you have.
Yeah, I have the data. So they had almost 50-50. So Stretch was 78 million and MSTR was 90 million. So let's say they have 2,500, probably 1,100 is from Stretch and 1,300 was from MSTR.
Yeah.
Excellent. No, and on YouTube, I put a poll. When is Saylor stopping buying BTC? When they reach 800K, when they reach 900K, when they reach 1 million, or never?
I think I will vote never.
Me too.
Yeah.
Me too.
And to be honest, guys, I think I want to take some maybe controversial point here. I think during bull run, the preferred offering are not doing very well compared to the total that they can attract. Because for me, if you know that Bitcoin is like pushing much higher, why you should park your capital into something that just delivers 10% on an annual basis when you can actually rotate money into Bitcoin itself or MSTR or some derivatives built on top of MSTR. So I think all the preferred complex is perfect for strategy for Saylor and the team to perform during bear market or during consolidation phase. In bull run, I expect, if we will have at some point in the future a new Bitcoin bull run, I think the preferred will still be very interesting for like institutional investor, but will be more gradual. But I think we will see again an expansion of the multiple on NAV. Therefore, they can issue more MSTR more aggressively, like we saw probably in 2021 and 2024. I think the complex of and the beauty of the preferred is that they can be used and be navigated during bear market and consolidation. Because if you remember, during the previous bull run, everything was perfect, but when it was bear market, strategy suffered because they didn't have an alternative strategy. Now they have an alternative strategy during the potential bear market that we're facing. So I think they really have multiple strategies for every kind of market condition, which as an investor is the thing that I want to see in a company. If they can perform well when it's bull, when it's consolidation, and when it's on a bear phase. So I think strategy has the full package, and they are pretty stable in every market condition. Of course, if we start again a bull run, we will be happier, but the operation is smooth, also in a bear market, thanks to the preferred.
Well, coming back to your original hypothesis that Stretch will underperform compared to MSTR during a bull run, let me argue about this. Mm-hmm. That is under the hypothesis that most buyers of Stretch are Bitcoiners. So in that case, it's a fair comparison. Why would I put my money on Stretch if I can go Bitcoin or MicroStrategy? The point being is that Stretch, I think the target, the final use case is not much as for Bitcoiners, but for institutional adoption, for these bigger pools of capital. So I wouldn't think that it will be slowing down. Yeah, but by contrary, it's if the rating improves, they will open the gates for other kind of investor other than Bitcoiners.
Yeah, and what I say is during the bear market, now with everyone hitting Michael Saylor, who will invest in some instruments that strategy issues when they say strategy is going to get liquidated, it's going to go broke. So during the bull market, when Bitcoin comes back to 150, 200K, and the strategy stock price is over 500, and everyone start calling Saylor a genius again, I think that will be more incentives for any kind of investors to put money into strategy. And when the validation of the model come with a bull market, more people will say, okay, I will put in strategy, but I don't want to be exposed to the risk. So I put on stretch. That's my point. I think that in a bear market, everything is bad for strategy, because we know the FUD, we know that now everyone say Saylor is crazy, Saylor is stupid, but when the narrative changes, a lot of money will come to strategy, and stretch is gonna be like the main instrument for those people who don't want to suffer the risk, because the shareholders now, we suffered the bear market. But if you invest in stretch, you are not gonna suffer the bear market when the bear market comes again after Bitcoin reaching, I don't know, 500K.
Yeah, no, I agree. And for me, I mean, it's proportionality. So for sure, stretch will be successful. But if we move and transition over the next months into out of this like bad water of a better market, I think the attractiveness overall of the product itself, if Bitcoin start to pump and then also MSTR start to pump, will proportionally decrease. I'm not saying that it's not still central to strategy or it's not very useful for the broader market, but it's still very small because stretch is 3 billion and they normally during bull market they can sell 3 billion on FMSTR in 1 week. So it's still relatively small. Overall, I totally agree with Diego that in the next decade, the stretch is not for Bitcoiner, is more for the broader market. But I think it's perfect for like strategy now to have preferred during the bear market, because it amplifies their balance sheet and everything can keep running smoothly. Whereas in 2022, on the collapse of FTX and during 2023 with Silvergate, they didn't have these optionalities. The MNAV compressed much lower one, whereas so far the MNAV is maybe went 0.98, 0.97 for a few days, and now it's again 1.15. So strategy is much more resilient thanks to the preferred. So I think it will be very fascinating to see how it will unfold over the next months.
And another thing that I noticed on the last weeks is that it looks that the daily performance, if we can shrink again the time frame to daily, remember the time when it was previous to or during that MSTR bull run of November 2024, it was? At the time, it was very well known. Many people would say that when Bitcoin grows, double, let's say, strategy goes 4x. So it looks like the performance was the double. And this is intrinsic to the volatility, because the volatility was also double. For a while, we lost it at the point that MicroStrategy and Bitcoin look like a little bit randomly correlated. In the last week, I'm noticing that every time Bitcoin goes up 1%, strategy goes 2. Bitcoin goes up 4, strategy goes 8. Yesterday, Bitcoin goes down 2, strategy goes down 4. Looks kind of like we're coming back to that dynamic. And that's why you see that the MNAV start picking back from 0.90 something into 115 or around there, because it kind of like pick up the same dynamics that it has before, reflecting the double volatility that strategy has compared to Bitcoin.
Yes.
And for many, it could also be a sort, I think it's too early to call it, but when normally we start to see again that MSTR is performing almost 2x on the bull run compared to strategy, might also significate for some people on X and some analysts that maybe the worst part of Bitcoin crash and the liquidation is behind us. And so now the market is kind of reassessing the equilibrium point. And if we have equilibrium point, it makes sense that strategy should overperform Bitcoin if we go on green days, and of course should underperform it if we go on the red day. So I think it's good to see this kind of 2x the volatility of Bitcoin to strategy again, as you said.
So I want to ask a question that we discussed in our Spanish live stream. Do you think that we reached the bottom of Bitcoin price, or we can go down?
I mean, for sure, nobody knows. I think the winter, as Saylor and many other people are also theorizing, it should be less violent than in the past. So I don't see feasible Bitcoin correcting from 126,000 to, I don't know, like 35 because of a 70% correction. Because in my view, we didn't have the euphoria and the explosion to the upside. So I think around in the range between 50 and 60% should be the max pain. I think now if we do minus 60% from the top should be something around 55, maybe 55, 52K. So I would say this one for me is like the bottom of the bottom. Now we weaked at 59 a few weeks ago. Now we're rebounded back around 67. I don't know. I would stay with this range. I think it's too early to call the bottom, to be honest, because there are still uncertainty. But yes, I don't expect to go down minus 75 or minus 80% because to me it will be look too much far-fetched and too stretched, to be honest, to the downside. So I would say around 55 is my worst case scenario. So maybe we are in, I don't know.
Yeah, totally agree with that. I think as the way up on the previous year was so mild, the way down shouldn't be that violent. And I think it was already violent enough from 126 to 60. So it would be crazy to me if we continue down the 60K. Obviously not financial advice. I'm not saying that it won't happen. In fact, listening to some other people, for example, Jordi Visser has another model that is mapping some macro data. And he's now rethinking the idea that maybe we can go lower if the software companies keep going lower. Understanding this correlation that we showed last week between the IGB ETF software companies and Bitcoin. If the software companies keep getting into troubles, maybe Bitcoins might get dragged down with that. But not because intrinsically something wrong with Bitcoin. It's just simply for some reason we got pegged to software, even though we don't like it. And let's see if the software performance start picking back, then Bitcoin shouldn't have a problem to rise back up. And that was officially the bottom at 60K.
Yes, I agree with Sam. For me, the bottom is it's around 60K. It's not gonna go much deeper, but nobody knows. I think that it's gonna be 60K.
Yeah, and that's why the DCA strategy is the best one for individual, for companies like, I mean, for us, like plebs like us, or like for Saylor. I mean, DCA, you don't know over the short term what will be the price movement. You can foresee the longer trajectory, but the best approach is just to do it on a weekly basis. The excess cash that you have from the salary, from savings, or if you sold some other properties and you want to rebalance, don't put everything in one acquisition. Just try to split in different weeks so that you can just remove the time based of investing. And I think DCA is crucial, and strategy, even though a lot of people are complaining, they have done 100x the balance sheet in 5 years. The stock is up 1,000% since August of 2020. So the strategy is working. It's hard to say that it's not working with those numbers. So
even on a week where they kind of fucked up with the timing, it doesn't actually matter. See, because when you
1,000 Bitcoin out of 700, so
exactly, that's the main advantage when you DCA is that you are weighting average the prices every time. So it doesn't matter if you fucked up 1 week and you buy at a peak, because it's just a portion of your total bag. Entonces, so at the end of the day, you're going to get the best possible price through DCA.
And again, guys, sorry if we stick on strategy, but another thing is that I'm laughing when I read on X that people complain about the cost base of Saylor, that now it's underwater. But again, guys, he's buying every week for the last 5 years. So if you do a DCA constantly from 5 years, and and you just increase also the size, because in 2024 and 2025 strategy eclipsed the buy that they've done in 2020, 2021, and 2022. Of course, the cost base is going higher. And of course, in some point in the future, if Bitcoin corrects, your average cost is probably higher than the actual price. But that's the whole point. They do DCA every week, no matter what, and they buy every time. So, you know, sometimes I'm saying, yeah, it's normal. That's their strategy. They buy every week. So for sure, in the future, if Bitcoin corrects violently, like in the next 4 months, they can go underwater with the average cost, but it doesn't matter because they're still solvent. They have 2.2 billion in cash reserve. They have 50 billion of unencumbered Bitcoin, and they probably gonna equitize the debt, the convertible debt, over the next years. So
totally.
Yeah, at the end of the day, doesn't matter. That comparison between the average price and the actual price,
yeah,
it's something that come up because most people, more retail people, see it as the same way they have their trading dashboard in Binance. So they bought, and the average cost is higher than the actual cost, then you feel like you're in the loss, and you're effectively in a loss if you realize it.
Mm-hmm.
But it's completely different dynamics for a corporation. That doesn't reflect the actual increase on the size of the company. It's just one more KPI. It is important. I'm not saying it's not, but it's not the fundamental. In fact, the proof is that the company is up 1,000%, while you are apparently down 10%, comparing the acquisition price and the current price. So it doesn't make sense. It is not a reflection of the reality for a corporation, right? For individuals, yeah, you're right.
Yes, totally agree. So I think that, again, I laugh when anyone attacks Saylor. I say, if you attack Saylor, you don't understand basic stuff of this. So let's move to the other slide. Oh, something that Saylor posted: Bitcoin is your bank 24/7. On a bank holiday, Bitcoin can send any amount of money anywhere on Earth in minutes for 0.447 cents. I think this
pretty clear.
Well, this is another thing that I wanted to discuss. Metaplanet holdings are outpacing share dilution. Metaplanet Bitcoin holdings increased for almost 25,000 since strategy inception, significantly outpacing share dilution at 541%.
Yeah, that's similarly to what we said with strategy. I mean, the balance sheet increases 100x. The shares probably, increase like, I don't know, 8x. So it's.
See, this is
side,
I remember when Bitcoin was going up very fast and strategy was not, because they were doing the ATM and people were complaining about that. Again, they don't see the long term. So these companies are increasing the Bitcoin per share.
And this is not an accident, by the way, right? This is by design. It's like that. So it's a financial engineer design. It's gonna be like that forever. Unless they change the design. But apparently, no. It's they're trying to improve it.
And to be honest, I really like also when has been pointed out that almost all companies in the S&P 500, especially the Mag 7, they have done financial engineering on their own stock, at least for the last 10 years with the buybacks. So when people say, Saylor is just doing financial engineering, the guys, I mean, they are doing the same also the Mag 7, because they're doing a record of buybacks of hundreds of billions of dollars every year for the last decade. What is this? It's financial engineering. You're just buying back with excess cash your own stock to put on your balance sheet and remove the float from the market. And then you can do it up to 40%, I think is the SEC rulings, but they are doing the same. He found out that Bitcoin is better than your own stock, because you can have 100% of the balance sheet tied to Bitcoin and not like 40% with some implication from the regulators. So it's just pushing the financial engineering to another level, but it was already known in Wall Street forever. So
yeah, and that is actually it is common practice. But say when Saylor designed this, it was based on, if we are getting fiat, why would I buy my own stock if, let's say, Apple perform, I don't know, the CAGR of Apple would be 15, 20%. Why would I buy back that instead of buying Bitcoin at 40% CAGR? So that's the basic engineering design of that.
So let's move to the other. Well, this is another thing. Abu Dhabi Sovereign Fund, a fund exposed to Bitcoin. Abu Dhabi Sovereign Wealth Fund has expanded its IBIT holdings by 46% in Q4 2025.
Well, we were commenting on the Spanish podcast about this. It's the fact that sovereign funds are very welcome to Bitcoin, at least to my idea of Bitcoin, while some Bitcoin maxis will oppose to any government involvement or corporate involvement. I think it's a positive, even in this case where they're not even buying Bitcoin, but they're buying the proxy of Bitcoin, IBIT. So why would that be a negative thing? Directly or indirectly, Bitcoin, it's stuck on somewhere where it's not going to move as easily as with the case of the whales, for example, that we are going to discuss later. So, and the other thing is that probably because of regulations, they are not able to buy Bitcoin directly, maybe because of the custody issues. Who knows how the government can structure that to make it legal, but instead they could very easily push in a button by IBIT. So,
I think it's a very positive news, and we see this uptrend since February 2024 with the launch of the ETFs. I don't know, I think now I lost track, but I think they have more than 100 billions probably collectively, all the ETF in asset under management for Bitcoin. Now all the US-based ETF needs to have also the redemption into physical, let's say physical Bitcoin. So if you can request to your IBIT to just send the Bitcoin position to a wallet that you have. So there is less paper Bitcoin built upon the US ETFs, which are the largest one. I think it's positive. And again, Bitcoin maxi sometimes are too kind of utopistic in some way, because to me, again, Bitcoin is permissionless. So you should, in theory, allow everybody, even your enemy, even someone that you don't like, to use it. If you start to say, no, I don't want company, no, I don't want government, no, I don't want university buying it, then you are just replicating the fiat mentality of saying, me, I'm right and you are wrong. Maybe today it's true, but in 1 year, maybe it's not true anymore. So the nature of Bitcoin is that everybody, even if enemies or people we don't like, should be entitled to buy it. So I don't see any problem. I think it's very positive.
Yeah, that's the key point. It's Bitcoin is, at the end of the day, the best expression of private property. So private property, by definition, cannot be vulnerable to other people, so it doesn't matter how you use your own private property, your own Bitcoin. If you want to buy IBIT, if you want to put it on exchange, if you want to keep it in self-custody, everybody can choose whatever way they want for the Bitcoin, even though we advise certain things like cold storage, it's preferable to IBIT. We don't say IBIT bad, cold storage good. We say everybody has a choice. You do whatever you want with your own private property, which is Bitcoin. So that's the difference between the more religious approach of some Bitcoin maxis.
Yes, that's the point. That's the point. So Tron family keeps stacking. The family-backed miner American Bitcoin has increased its holdings by 196% and now holds 6,039 Bitcoin and is ranked number 17 on the top 100 companies that hold Bitcoin.
I mean, not a big fan of kind of politician, especially the Trump son, backing this and now becoming like a Bitcoin maxi. And I remember when he said it's a good time to buy Ethereum at 3,500, I think. So it's like, it was not a great time to buy Ethereum. Probably it's never a good time. Yeah.
They could buy Bitcoin the same way they could buy any other shitcoin. For them, it's the same.
Exactly. As long as they make money out of it, they will do deals with everybody. So sometimes it's Bitcoin, sometimes it's Ethereum, sometimes it's Kronos with crypto.com. So it's to me, very unreliable. But again, Bitcoin is permissionless. So American Bitcoin has 6,000 BTC. Everybody's welcome to buy more, please. Try to convince your dad to buy more for DJT, which is the other holding of the Trump family. So guys, buy more. But yeah, I'm not sure they understood.
Even you should welcome your enemies to buy Bitcoin because they will make your stack stronger.
Yeah,
that's the point. And the last one is something that I wanted to discuss. The OGs are selling their Bitcoin. Over the past 2 years, individuals have sold more than 1.2 million Bitcoin. That's over 6% of the circulating supply and more than is attributed to Satoshi era holdings.
Mm-hmm. Right. So what came to our attention the other day, there was another news saying that in a few days, there could be the last 1 million Bitcoin to be mined until 2140. But on the other hand, you have 1.2 million that have rotated in a few months. So the circulating supply of Bitcoin is still very impactful in the price action, more than the amount that is going to be mined or even the mining that we have today. That's why I say that the halvings at these points are not so driving of the price as all this circulating supply is. And here your point is more like, okay, so why these people having Bitcoin from the original era have sold at this point? Why? When they're supposed to be the OGs, they are the ones supposed to have more hours of learning of Bitcoin. What happened with the people from the 2010s to the 2019, the pre-Saylor era? It's all of these people that have sold their Bitcoin, this 1 million Bitcoin. What happened with them? So,
yeah, true. But if we also see the last 5-6 months, I think the OGs are right in the sense that maybe they knew. I mean, they lived probably 4 or 5 bull run at this point. Maybe let's say 4 bull run. Maybe they know something that other participants maybe don't know exactly, how to feel this kind of small euphoria, these signals, this kind of momentum. So maybe they just decide to, after 100,000 was a long time milestone, that they say, yeah, maybe I just exit partially here, not necessarily the full position. And so far they are correct, because from 110, 120, now we're back to 67 or 70. Who knows, maybe they're gonna rotate back and buy more. Maybe we will see addresses with more than 10 Bitcoin accumulating soon. I think it's market dynamics. And what I see that is positive for me is that Bitcoin is very resilient, and we absorbed more than 1.2 million Bitcoin sold. And still, we are not back at 10,000, and Bitcoin is not broken. Bitcoin is not, the volume is not, going down, actually it's going up. So overall, it's a redistribution. And I think, again, for the short term, they have been right. And now let's see if they want to come back and join back to see the next legs up.
Yeah, my point is more, our point is more philosophical than like a market strategy or like investment strategy, because there are all these people that are from OGs, that they have a lot of Bitcoin, blah, blah, blah. And they are like probably the owners of the narrative. And they are the ones that criticize, for example, Saylor. That they say, oh, Saylor comes to kidnap your Bitcoin, BlackRock, they are shit coins. But on the back, when the cameras are off, They are selling Bitcoin. They are not doing what Saylor says, that is, you never sell your Bitcoin. You are trading Bitcoin in exchange of fiat. So this is like, of course, what any person can do whatever they want with their Bitcoin. They can sell, they can exchange through a shitcoin, whatever. But what calls my attention is all these people that are the policy of truth. They criticize Saylor, they criticize BlackRock, and they sell. That's my point.
Yeah, no, I see. Maybe they don't like exactly the trajectory of Bitcoin that has become something like completely. Now we only talk about the price. We only talk about the sovereign buying Bitcoin. We talk about politicians involved with Bitcoin, which again, for me, is the inevitable step of becoming a larger asset class. But for people entering maybe in 2012, 2014, 2016, they really had a different view of Bitcoin. Now they feel that maybe they don't feel 100% aligned anymore with the actual Bitcoin status quo of 2026, and they decided to exit. But again, we don't know if it's total position. Maybe they just sold 5%, 10%, or even 15%. Imagine if you have, like, I don't know, you bought at an average cost of $500 and now you exited at 110,000. Let's say 10% of your position. Who am I to say that you are betraying Bitcoin? You're just selling a small portion. Maybe you want to do, relocate, change your country, because maybe you are in the wrong country, because maybe there are some dictatorship or some problem, and you just decide to change your life, and you just want to do some upgrades, or you just want to exit a small portion. I think it's just market dynamics. But Bitcoin is strong, and we see that overall, even one Nakamoto stack, we are still at 70,000. So I think the demand is there to buy.
Yes. So that's the last one that I have. I don't know, Marco, if you want to share something else with us.
Yeah, maybe a couple of news. Maybe I share my screen here. So the first one will be very quick and funny. So wait, why it's not sharing? Is it sharing, guys, or no? No. Now? Yes.
Yes.
So I remember, like, a few months ago, everybody was saying, Harvard is on our side. They understood Bitcoin is the best endowment on the planet, and now they cut Bitcoin ETF stake, which per se could be bad or questionable, but they sold Bitcoin to buy the ETF of Ethereum. So I don't know, guys, any comment on that?
Yeah, that's a living proof that in Harvard you don't have the smartest people in the world. So,
Also, a critic to our Bitcoin community is trying to pick up some narrative out of Harvard. Like at the time they were saying, see, Harvard is buying Bitcoin. It means we, the Bitcoiners, are the smarter people. We are associated with Harvard intelligence. Suddenly you realize that it has nothing to do with that. It has probably just a local fund that they run the same way they run any other asset. And for them, it's exactly the same if it is Bitcoin, Ethereum, gold, silver, shitcoin, whatever.
Yeah, that's the point. Harvard doesn't have the smartest people of the planet, for sure.
Yeah, so I mean, that one was just a funny discussion.
That reminds me, one day a former president of our country, she was giving a speech on Harvard, and someone asked a question that for her was a silly question, and she said, guys, you are in Harvard, not in the University of Morons where I studied. So and was like, Harvard was the best, and now they do this. I think that the smartest people in the world is not in Harvard. Most of them are on YouTube.
Yeah, I think the world is changing very, very rapidly. So yeah. And then maybe we can just move to the last point that I have, guys. It's news of Babylon, which is pretty known on the DeFi ecosystem. So let me share first these charts. So I mean, many people don't know, but Bitcoin is used also in DeFi. And as of today, there are more than 5 billion of total volume or total US dollar backed with Bitcoin in the DeFi ecosystem. And the largest player in the Bitcoin DeFi is Babylon. Babylon protocol is around 4 billion out of the 5. So I would say 80%, close to 80% of the total amount. And so the idea of Babylon is to create the DeFi products, so Bitcoin lending, DeFi built upon Bitcoin, without going through Aave, without going through Ethereum, without going through this other altcoin. And actually, they close an investment round. So now let me share the other tab. They close an investment round of 15 million with A16Z, which is the venture capital firm of Andreessen and Horowitz, which is one of the most active both in the AI space and also in the crypto space. So here the idea from Babylon is that they are using these Babylon trustless Bitcoin vaults, a new infrastructure that enables native Bitcoin to serve as collateral across on-chain financial systems. The whole idea is that the Bitcoin will remain fully tracked on-chain. The custody will not be demanded by Babylon, but will remain on-chain, and you will keep the private key of your own Bitcoin. You will see, monitoring like 24/7 that the Bitcoin is not moving, because you still have the access to the private key and the ownership, but you can access DeFi, other DeFi protocol via those bridges and those vaults that Babylon is building. So it's already more than a couple of years that Babylon is active on Bitcoin only DeFi, and seeing this 15 million coming from the traditional space to try to build a new product with better design, better application for consumer, and try to compete, I would say, with the Ledden of the world, the Strike of the world of trying to have liquidity with your Bitcoin. I think will be very, very interesting to see if they can survive first, and if there is actual demand of liquidity on chain via those Bitcoin vaults. So again, it's a very new product, very new kind of also information. So I just wanted to point it out. I'm not endorsing by any means this kind of product, but I still think that we have plenty of news and new software built upon Bitcoin, like Babylon and like others. So I think people are building stuff, and I love to see people building on Bitcoin only.
I have one doubt here about this. So this is a company. How does it qualify or classify as a DeFi product? Shouldn't it be something like Rostock, for example, is a DAO?
It's a protocol.
It's a protocol. It's not a company, actually.
Yeah, also Babylon, I mean, they issued a white paper a few years ago. So it's like a DAO, a decentralized organization. But again, they can receive, I would say, money from external external company. So it's decentralized as a company. There is this white paper on the foundation. They are building on-chain with Bitcoin. I would say similar to some Lightning companies that they're using the Lightning network as a layer 2 on Bitcoin, but still they have some kind of centralized activities as a startup or as a company. But the only thing that I really like about them is that they are trying to build DeFi only on Bitcoin, and to try to unlock liquidity, loans, and other services that might be helpful for Bitcoiner on chain. So you can see your Bitcoin, you keep your private key, you see that they don't re-hypothecate, and it's all trackable on chain, which for me it's much better than sending my Bitcoin to, I don't know, Strike, and then receive dollars, and then I need to trust Jack Mallers, or I need to trust the CEO of this company. So the idea is to have the DeFi, but built on Bitcoin only. So it's a new experiment, I would say. So I'm very excited to see if they can scale it up and can work out.
But they still have a token pegged to Bitcoin or something like that, like in the other nine, like in Roosstock, for example. Even though it's a all Bitcoin only protocol, you have to convert your Bitcoin into something they call RBTC.
RBTC, yes.
Which is a token native to that network to operate as a DeFi protocol. Is it the same
probably
here?
They have something similar. I think I read something like baby token here. The utility baby token, yes. So again, I'm not saying that this is the solution. I'm saying that it's a new path that some companies wants to try to build DeFi on top of Bitcoin. And again, the market needs to be an open market, needs to be tentatives, needs to be kind of new potential solution as it was for the Lightning Network in the past, and see if this idea might work or not. If it might work, maybe some new entrants will join in, will try to do a better product, will try to remove maybe the token, maybe they try to remove other potential mechanism of centralization. I think it's an open question, but I think Bitcoiners really need on-chain services, on-chain utility from their own Bitcoin, at least for unlock potential liquidity or be used maybe in a small percentage in alternative to cold storage. A small percentage might go onto this protocol and you can live your life instead of selling, instead of capital gain tax and other stuff. So just
right.
put an.
I wonder if the case of study for the operation of this kind of protocol business, whatever we call it, it's if the main case at this point is lending or just transaction fees. Because, for example, Strike, Jack Moller actually moved the business model from just using Strike as a platform to buy Bitcoin or just small transactions into lending, because obviously you can get more fees from the lending side than that just use the protocol to pay on the supermarket. So I wonder how is that relation? Is it lending the main driver to generate fees for this platform to survive? Or is there any other mechanism? For example, in Solana or in Polygon is mostly related to the gambling activities that generate a lot of trading volume and fees, right? So maybe the application is different if it is a Bitcoin-only protocol. I could guess most people could be interested on the lending service. So I don't know, figure it out.
Yeah, I mean, I can go deeper, and maybe for the next episode we can have a more in depth about their own business model. But I think for Babylon and this DeFi, mainly is for lending and mainly is for utilize and having utility from your own Bitcoin, but never give up your custody, never give up the on-chain, never give up the on track that again on-chain and the blockchain of Bitcoin is giving us. So it's kind of trying to evolve the traditional concept of DeFi that normally goes into this altcoin token scams, most of them, not all, but most, and try to build some more honest system only on Bitcoin. So I think it's something exciting to see. I'm not saying that is the solution. I'm not saying that is the best application or that people need to go and try it out right away. But it's a new branch, like it was in 2017 Lightning Network, that for me today as well, I'm a bit disappointed because it seems that it's not scaling up, the Lightning Network. It's stuck at this 5,000 BTC. The channel are very complicated to run. It's not gain mainstream adoption at all. So it seems like a fading narrative also, the Lightning Network. So we need to see something else coming at the horizon to have more software application on top of Bitcoin. So finger crossed.
Yeah. Well, that's the part that I think is harder for Bitcoin to scale, even the Lightning Network, is that now you're competing on an unfair territory with Solana, because Solana resigned decentralization to promote a cheaper, faster service, which is what Lightning Network is supposed to do. but the ecosystem on Solana now is big enough as to overtake the Lightning Network. So I don't see the pattern, at least something in their narrative change or Solana catastrophically fail. I don't see how the Lightning Network can pick up pace against Solana or any other future shitcoin that offer the service of transactions at super cheap, super fast pace.
Yes.
Yeah, hopefully more companies also like the Square, like with Jack Dorsey announced like a few weeks ago that all merchants that are in the Square ecosystem can now receive and pay in Bitcoin utilizing Lightning Network. So in my view, Lightning could work only if there is big effort also from actual companies, like in the processing, payment, or like e-commerce or like other big platform, that they decide to maybe spend a little bit to maintain an opening node in order to have a new channel, and then maybe catalyze all this payment into also Bitcoin via Lightning. If we don't have those big companies accepting some cost and some running of the Lightning Network, I'm not sure the Lightning Network by itself, by how it is designed, and after 7 years of application, can self-sustain. Because again, it's costly, it's pretty hard to manage, it needs to be very technical, and you don't have much reward to running it. So there is not economic incentives. You can only have it if you have like a Jack Dorsey and other company that said, yeah, for me 1 million is not much. I just want to allocate 1 million for the cause of Bitcoin and to have this to serve my customer with Lightning Network. So I think it's a good starting point, but it's to me not scaling up yet, the Lightning Network, and so we need to see other solution, and engineers needs to step up. I cannot step up on this side. I lack technical expertise or software or this kind of knowledge, but for sure like plenty of young minds are trying to work on this field. So.
Well, like your friends from the green Bitcoin.
No, the green Bitcoin. No. Don't.
They will have plenty of ideas about this.
Don't talk anymore about this asshole, please. So, BCH? No. It's like I have these trolls on Twitter every day. So
and now it has become more popular in the feed again. BCH, Roger Ver, he was not the bad guy. Roger Ver was.
The other day I saw they made a poll who is a bigger Bitcoiner, either Roger or Saylor, and you post Saylor, and I would say Saylor.
A lot of people saying Roger Ver over Saylor. I literally cannot understand how is that possible. He created a fork on Bitcoin. He changed the major fundamental of Bitcoin into Bitcoin Cash. He bought the Bitcoin.com, URL to have his own company built, and literally misrepresenting the investors, because you have Bitcoin.com and then your token is Bitcoin Cash, which is another one, claiming that is more true than the original Bitcoin created by Satoshi. I mean, it's a scammy scenario, and still people believe this shit. It's incredible.
Because the people who believes are people who is crazy. Even though when I enter to their profiles on X, they have all the conspiracy theories. They have the bingo of the conspiracy theories. They are all flat earthers. They believe that people don't walk on the moon. A lot of these crazy conspiracy theories. They believe in all this crap. And I say, if you believe that Earth is flat, of course you can believe that this crap of Bitcoin Cash is the real Bitcoin. So,
but what is crazy is that this green Bitcoin, because we're not going to give it more promotion, is less than 1% of the market cap of Bitcoin.
Yeah.
And still, they managed to have such a big marketing team as to push back against real Bitcoiners. That's what is incredible. If they are only less than 1% of the Bitcoin, how they have such a big marketing reach?
Because they are crazy people. They are like flat earthers. You have a lot of people that you enter to YouTube and there are a lot of videos talking about that the earth is flat. So they are, it's like,
And yeah, to be honest, I also met some of them when I was in my previous conferences in Bangkok, and yeah, I mean, at first they seem very, very interesting people, etc. But then, as soon as you spend like more than 30 minutes with them and you start to share some knowledge and some information, you start to say, "Look, why are you saying this? What's the point?" And again, they really believe that Bitcoin Cash is better than Bitcoin. They really believe
Because
that you're very Satoshi. I don't know how you must be stupid to think this.
I can say, if you believe that the Earth is flat,
Yeah,
you can believe anything. You can believe that I am Brad Pitt. So,
or
that's
better,
the point.
or better than Brad Pitt.
So that's the point. I think that these are people that are so brainwashed by the conspiracy theories that they were brainwashed. Now they all believe about this Epstein crap that they are talking about. Because the guy who posted on my ex, he said that, nah, you keep promoting this coin created by Epstein. The only true is the green Bitcoin that now is in offer 500 something. So it is what it is.
I think what it is. Genius was to buy the domain of bitcoin.com back in 2000, probably 14 or 13. And then now he built behind this website, the application with news, with like an exchange. So a lot of people that are kind of superficial, they start the journey. They say, yeah, bitcoin.com. I heard about Bitcoin, so I go there. And they have more than 3 million people on X, I think, on their own page. The application, it's like pretty used by not only by the exchange but also the news platform. So, but it's based on a fraudulent activity, because he's promoting Bitcoin Cash, which is a fork and failed fork, because again, it's like, I don't know how much today, how much is trading.
Yeah, we compare the market cap. The market cap of Bitcoin Cash is 0.75% of Bitcoin.
I mean, compared to Bitcoin since 2016, it's like minus 99.5%. So it's literally zero. But yet people fail for this and give money to this project, but it's a fraud.
Because again, the people who believe on that is the same people that believe that Earth is flat.
What is weird is that they also get scrambled into these technical discussions.
Yeah, the point is that they discuss with the OGs, with these people that, for example, they cannot discuss with us or with me at least, because I don't give a crap about the technical stuff. They can talk about the technical, but when you go and discuss with someone who is into the technical stuff, they enter in this fight and they get traction. That was happening in the Argentinian conference.
Right. So they launched this technical pitch into Bitcoiners, real Bitcoiners that knows a little bit of the technical, and then you get the argument. Once you get the argument, it doesn't matter if your argument is right or wrong, you just win the battle.
I think that's my argument. That's our argument.
This is the same argument that me.
Yeah. Okay, so imagine to claim that this thing is real. Imagine to claim that this thing is better. Imagine to claim whatever you want. Look, it's almost impossible to see here. It's zero. That's TradingView. It's not my website. It's TradingView. 0.00 when you price Bitcoin Cash in BTC. Zero. And yet people on X start to buy because now it's a 2 green candle against Bitcoin. It's zero. And Roger Ver should... I mean, I'm not sure if he needs to stay in prison. Probably he's in prison because he was violating some US rules or tax fraud or whatever. I'm not saying that I didn't go into the court case, but for sure he's a scammer. He's a fraudulent actor, because you want to completely change and disrupt Bitcoin on the block size war, and people that won this side of the battle realize that this is not the way forward, and only Bitcoin should exist and not this shit. So.
No, I think that all should exist, because we live in a free world. Bitcoin is permissionless and the code is open source. The point is that should exist, yes, but people.
Yeah, but going to zero against Bitcoin, okay.
But the people, we live in a free market. The last vote is the people. It's same as with pineapple pizza. For sure, for you, must not exist. And for Diego as well.
No.
But I like it.
You like it, yeah?
I should coin at the end of the day.
So we have the Roger Ver in the group, Diego. We should eliminate Fernando.
It's incredible. Anyway, so guys, it's been a pleasure talking to you today. Fortunately, we didn't have any problem.
Yeah, we survived.
Probably,
for first time.
probably,
No technical incidents.
probably is the year of the horse that is doing good with us. So let's see. So Marco, thank you very much for your time. See you next week.
Thank you, guys. It was a pleasure.
Bye-bye.
Bye-bye.
Bye. Bye.